Good morning, welcome to the Phoenix Blue update for Monday the 3rd of April, presented this morning by Tom Colley. Okay, Friday we had the end of the month, we had the end of the quarter, so we go into the markets with somewhat of fresh eyes for the week ahead. In terms of the week, big event for the week as a whole, we have non-farm payroll on Friday. So we will obviously be aware of that and give you a heads up on that on Friday. In terms of what we've got news out today, or in fact what news we've already had overnight. First, worth mentioning, if anybody trades the Asian session, we've got bank holidays both today and we've already had the bank holiday, or we'll have another bank holiday in China on the Asian session tomorrow. Also overnight we've had some retail sales figures out of the Aussie, of interest particularly at this moment in time, because tomorrow morning, the early hours, we have the RBA rate statement and the announcement of the cash rate. There isn't any expectation of a rate rise on that. We're currently at 1.5%. The previous month the forecast is 1.5%, and that seems to be the general opinion. We've had mixed data out of Australia, some good, some bad, so a somewhat confusing picture, so we expect the RBA to be sitting on its hands in that respect. This morning at 9:30 UK time we have manufacturing PMI out for the pound. Really could be quite significant, this, because we've been seeing some good numbers on this data following the Brexit vote. We've had the fall in the value of the pound, making exports more competitive and driving manufacturing production. So that'll be a figure to watch out for. Forecast is 55, ahead of the previous figure of 4.6. So obviously anybody looking at the pound, it's probably a bit early in the day for you to be doing that, but you want to be aware of that. Then this afternoon we have the ISM manufacturing PMI, and then, as I've already mentioned, overnight we've got the RBA statement, but we've also got the trade balance earlier out for the Aussie. So a lot going on with the Aussie. Worth mentioning tomorrow as well, I think it's 10:15, RBA Governor Lowe speaks as well, so we can sort of bundle that up and say that whole picture going through tonight through to mid-morning tomorrow when we get that speech, be that significant or otherwise, could be seen as a news risk period for anybody interested in trading the Aussie. Okay, over to the charts. Well, we clearly spoke about on Friday's video, we looked at a weekly chart and we saw how aggressive and how strong this move on the dollar index had been last week. Created a big weekly engulfing bar, and we're now at this level around 140. Another level at about 190 here. We'll be looking for dollar strength to play out and push above these levels. We may in the short term need a pullback before we get the next leg up in that respect. But we'll have our eye on this chart with particular reference to the euro, because again, as I think I stated on Friday, this dollar strength on the dollar index here has been very much driven by the euro. Bear in mind that the dollar index is made up of a basket of currencies, but that basket is weighted in terms of the amount of trade in principle that is done between the dollar and that of the currency, and in that respect the weighting is very, very strong in favour of the euro at about 58%. So 58% of this index is made up of the euro. We saw a big weakening of the euro through last week, and that was reflected in this big move here. The dollar strength wasn't as strong against all currencies. We'll see in a moment. If we go over to the yen, we could see, yes, We had dollar strength in this market, but to a lot lesser degree. We didn't have that big engulfing bar that we saw on the dollar index there, and was also there in the opposite direction on the euro. As regards the yen, well, we're still bullish this market. Possibility of a look down at the 110.12 level here for a double bottom. Alternatively, a break above this 11 at about 112. Looking for a close above to pull back as we normally do to the level and take the trade onto the long side. Couple of other levels here, potential add-ins or certainly intraday levels if the dollar strength really was to play out either this week or going forward, and we can use that as a way of adding into a trade or having individual trades, particularly intraday, when we have some nice levels going through an area like that. Over on the euro, well, there's that big bearish move created that big bearish engulfing bar last week. This market, because of that big straight move, looks like it needs a bit of a break. It needs a pullback. We're watching levels at here 107 and 1745 to take this down on its second leg down to targets around 105 down at this support zone here. I've actually got an end of day trading at a slightly higher level there. That's a worst case scenario. We're biased to the short side on the euro. Any break above that, and that bias would change. But also, particularly, these two levels are ones that we'll watch and potentially have trades set up as they approach. Okay. Over in other markets, and we have the Kiwi here, a bit out of order. I should have the Aussie next, but I've got no. Well, let's go to the Aussie. That should be next in the order that we normally do things. This market, well, we had, in terms of the daily chart here, we had consolidation last week. We're still above this trend line here. We're still favouring shorts from this 77.50 zone up here. We have a COT extreme signal that could have potentially already played out. If we get a break and retest below that trend line, I would suggest that's already played out. However, because of the timing of when that signal appeared, potentially we haven't yet seen the reaction to that signal. So we do favour a double top through this level. We've got a falling trend line through there, which has two previous COT extreme signals on it. So yes, we may have missed it there. It may have gone. Our view is we haven't. But we will, if we get a break of the trend line here, look to take trades back down to the short side, but only through to this level around the 7,500. We see that as being confined in somewhat of a box range there. So if price comes down there, we'll be looking for potential reversal back to the long side on that. Now going back to the Kiwi. Falling trend line here, price below that. We've got a box range in here. What we expect from a box range, we're going to get price accumulating within that. We then look for a break, close above or below, and pull back to the level of the top or bottom of that box range. In this instance, we've got a COT extreme signal at the current signal here on the bottom side. Again, a little bit like the euro, the signal's valid at this level at 6,890 through here. However, our preferred level is more the 6,890 level through here, simply because that's the significant support zone at more significant lows. So that's what we actually look for when we're trading a COT extreme signal. We look for a significant or key level. That isn't always the case. It could react from that. There is a signal that would allow it to do that. But if we do get a break to the downside, close below and pull back, we'll happily take that trade from the bottom of the box range down to the 68.90 loan before stopping that and reversing that back to the long side on the COT signal. Okay, other markets other than FX. The DAX, the German stock exchange, has reached a very key level. We're at the all-time highs here at 12,400. This is the weekly chart. We have an expectation, or our bias is for euro weakness. The stock market, the DAX, will normally operate inversely to the euro. So we are approaching a key level here, which will look to correlate with a key level on the euro, and look for a break above, pullback to take that to the long side if we see a more significant fall to the short side on the euro. So a level to be watched very simply just because of how key it is. It is that all-time high, but as I say, correlate that with the euro. Silver. Interesting, I think we showed you gold and the potential of a double top on gold on Friday. Well, we have the same here, potential double top at 1850. We will be looking at purely a price action entry. Yes, it's a nice level through there, but we also have our eye on this channel here, and the alternative to that trade, if that trade doesn't play out, we'll be looking for price to come up to the $19 level, where we've got confluence with the top of that channel. With there be looking for take that trade, targeting the bottom of the channel as the completion of that leg down. If, however, we see price action at 1850, because that also constitutes a level, it's these this spiky area through here with these long wicks going from closes at a significant level that causes the uncertainty there. So we will be looking for price action there and looking to take that to the short side. If that was the trade, we'd be looking in the first instance of targets about around that $17.30 level, simply because of the upward channel, which would still remain valid. Obviously, we get down to this level here. That's the neckline of that head and shoulder, of that double top. So that would be a significant level to take it for a further move to the downside, but we don't necessarily at this moment in time anticipate that being the case. Also worth mentioning, we have a COT extreme signal at the top of the channel here. We probably, if price gets to the 1850, that will probably be before we get a COT signal this week. So we would be looking for price action there for more confirmation. However, if we break through that level and the signal for this week's data comes out, potentially we have further confirmation of this $19 level being a COT extreme signal, and that in confluence with the key level and the trend line would give us the opportunity of taking that as a limit order with a smaller stop. Another market, this was on our watch list that went out yesterday. We have a small box range within a large box range in this market. We've got a rising trend line through there, and we had a lovely low test off the bottom of the box or boxes, and this rising trend line here. Lovely low test, simple entry above the high, stop below the low, and we put that entry in overnight, and that has triggered us in already this morning. Our natural target is the top of the smaller box range, but predominantly because of this one spike here. If it wasn't for that one spike, we'd be certainly looking to take a trade through to this next level at 1,000. It's obviously a big round number and a key level, so what we'll be looking to do is take some risk out of the trade, take some profits at that 982.80 level, and looking to run some more through to the 1,000 as being an eventual target on that. So a nice start to the week for platinum traders, for Phoenix Blue traders on platinum, and we're already entering potential for profits on the table there. Next free trading event is a week on Tuesday the 18th of April in London. All the details are here. This is a site we use, it's called eventbrite.co.uk. You can go direct to that site now, register on there, and you'll get all the joining instructions and invite, and all the details, etc. If you'd rather simply click through to the website, come through on the contacts page and tell us you want to come along, and we can do that for you. Tuesday the 18th, the opportunity to trade alongside the Phoenix Blue Fund Managers live. Lots of information to go away, a lot to learn about how we analyse the markets technically, fundamentally, and through commitment of traders analysis. And a great afternoon can normally be had. You get the opportunity also to talk to some of the other Phoenix Blue traders to get a chance to understand how Phoenix Blue's methods have taken them to their next stage in trading. Okay guys, that's it for today. So start of a new month, new quarter, likely to be a little bit slow this morning, but have a great week's trading, and we'll be back with you in the morning. Thank you and goodbye.